Hi, guys. This is Direk Kanijo, and welcome to my podcast. Today, I'm going to be talking about Mr. Market. This is another one of Ben Graham's idea. He wrote about it in Chapter 8 of The Intelligent Investor. The chapter is called The Investor and Market Fluctuations, and it is one of my favorite chapters. A very small fraction of stock market participants are actually value investors. Value investing is easy to understand, but very hard to practice well. I think the main difficulties in practicing value investing comes from understanding who Mr. Market is. Graham advises us to imagine that there is a fellow called Mr. Market. And whenever you bought into a business on the stock market, this Mr. Market guy automatically became your business partner. And every day, from Monday to Friday, Mr. Market would come to you and offer you an identical buy or sell price for your stake in the business. Given those conditions, how do you want Mr. Market to behave? You obviously want Mr. Market to be super crazy because then he's going to come to you with crazy stock prices. As an investor, these crazy prices are a blessing. Let me tell you why. When Mr. Market is extremely optimistic and euphoric, he's going to come to you with really high stock prices. You can choose to ignore him, or you can choose to take advantage of his euphoric mood by selling your stake in the business to him at a ridiculous price. On the other hand, when Mr. Market is extremely pessimistic and depressed, he's going to come to you with really low stock prices because he sees nothing but trouble ahead. You can again choose to ignore him, or you can choose to take advantage of his depressed mood by increasing your stake in the business at a bargain price. In both scenarios, Mr. Market is there to serve you and not to instruct you. If his prices are uninteresting to you today, you can ignore him, and he won't even feel bad about it. In fact, he'll come back again tomorrow with a new set of prices on all sorts of businesses. Here's what Graham had to say about price volatility. He said that price fluctuations have only one significant meaning for the true investor. They provide him with an opportunity to buy wisely when prices fall sharply, and to sell wisely when they advance a great deal. At other times, he will do better if he forgets about the stock market and pays attention to his dividend returns and to the operating results of his companies. By the way, you never get an identical buy or sell price when buying a private business or real estate, but you get this in the stock market, and it's a big advantage. If you are a real estate investor, imagine how great it would be if every day you got an identical buy and sell price on every piece of property. And to make things even better, imagine that the swings in those prices were really big. It would be fantastic. This is the same approach investors should take in the stock market. To recap what we've talked about, imagine that stock prices are coming from a fellow called Mr. Market. He has two great qualities. He has these crazy mood swings, and he doesn't mind being ignored. I'll end with a quote from the late John Bogle, who founded Vanguard. He said something that I think sums this episode up perfectly. He said, "The stock market is a giant distraction from the business of investing." That is all for today. Please like and subscribe to my channel. Thank you so much for listening.